Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Josef Schachter, founder of the Schachter Energy Report online at SchachterEnergyReport.ca. He's speaking to us from Calgary. Welcome back to the show, Josef.
My pleasure. Good to be with you, Jim.
Josef, the overall markets, I hear the only thing that's really positive right now are the energy stocks. Is that true?
Yeah, the energy sector is a lagging one. So when we got the bottom in March of 2020, you started seeing, the whole market come up. Energy did well. And in the last phases, usually of a bull market, the laggards and the high beta names are the ones that run. So we've already seen, the leading mem stocks, which were, of course, very powerful in, late 2020 and first half of 2021. They've already rolled over, and we're now beginning to see the FANGs started to roll over. Amazon, for example, 2021 really had a flat year. But, Arc Innovation, which is, the lady who's made a fortune in Tesla, she's also owned Peloton and Robinhood and others. Her fund's down almost to 50%. Things like AMC from the high in June of last year are down about 80%. And Robinhood, a shocker, went public at 36. The day it opened, it was down, got as high as 85 a week later, and now it's trading in the 15. So it's down 82%. And then you can go to Zoom and Peloton and all the others. And we're now seeing indices like the Shanghai breaking down. Alibaba Group, of course, which was the one that the government went after when they were going to try to take Alipay public, and they didn't allow it. The stock reached the high of $320, and it's now trading 120, 130. So it's down almost 65%. So we're looking at the markets, getting tired. I think the energy sector is way overdone, based on, supply demand. We're in winter, which is, of course, the strongest demand period of the year. But we still, everybody got excited this week about, commercial crude stocks, which had a decline of 4.6 million barrels. And that was the headline that jumped everybody to push the price of oil up to, 84, 85. And yet they ignored that total motor gasoline inventories rose by 8 million barrels and distillates by 2.5. So you had a 10.5 million barrel build in those two versus the commercial stocks down 4.6, which means the refineries were creating product for the market and making sure there was enough inventory for, heating oil and for gasoline, winter grade gasolines. And yet they ignore the fact that the net number is, it's 10.5 versus 4.6. So you're looking, almost a 6 million barrel build in inventories, and yet that doesn't get the attention. It's the headline number of, crude stocks. So to me, I think the market is ignoring that we're going to see growing production inventories, or worldwide inventories after winter, i.e. Q2, Q3, Q4. The IEA is saying that. The EIA is saying that. Even OPEC is implying that there's a build in inventories in the second half. So I think the market is in la-la land. And this to me reminds me of Q2 of 2008 when the price of crude went from 80 to 147, even though the early signs of the financial crisis were already there. Bear Stearns, if you remember, the banks in Iceland, the banks in Ireland, and the market just kept on going up. And now we've already started seeing a debacle in the real estate market in China. The banking sector there is being hurt. As I mentioned, the Shanghai index is down, now. And we're beginning to see, like the mem stocks in the United States, you look today, we have a 2% decline in the NASDAQ, a 1% decline in the S&P. and yet the Dow is just down slightly. So the big cap of names are still getting a lot of attention and a lot of money, but it's a narrower and narrower market, and that's what you normally see at the top and at the early phase of the beginning of a decline. My guess is we're going to be facing 7 to 10,000 points off on the Dow between now and in Q3, and the price of oil, which to me fair value is probably in the 60s, probably will go into the 50s. So our view is people should have be selling, taking profits, definitely not using margin, and going to the sidelines and having cash for the next great buying opportunity. As when you and I have been talking in the past, in March of 2020, we were saying this is bargain city, buy, a table pounding buying opportunity. Well, now we have what I would say is almost a table pounding selling opportunity, and the downside is severe. And people should, if they're using margin, definitely not do that anymore, and make sure you have some cash reserves, because if you own, you're over-leveraged in tech and the FANG names and they go down, it's going to be very, negative to your portfolio values.
We'll have more with Josef Schachter right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Josef Schachter. The International Energy Agency is warning Canada's lack of energy policy is hurting foreign investment in that sector. Is that a concern?
Well, I think we're seeing, because of the ESG movement around the world, that we're seeing negative, interest or low interest in investing in the energy sector, and that's worldwide. The issue of foreign investment, in exploration around the world going forward is going to be a problem. Getting capital in markets from the comments that we're getting from the from the ESG world, and countries like Norway, the Case Depot in Canada are all talking about removing their energy weighting. So there's a big part of the historic investment community that are not interested. But because the industry is doing well and cash flows are rising, the natural gas sector is my favorite, because natural gas is going to be the interim fuel as we end up, not using coal to the degree that it was being used in the last few years. Surprisingly, right now, given Europe's problems, they're using more coal than before, because in Germany they've closed their nuclear facilities, and because of the renewables, wind and solar have not performed, and there's still problems with battery storage. So that when those two key inputs for renewables are working well, there's no way to store it sufficiently for length of time that you can build up reserves for the winter time. So to me, I think natural gas is going to be the winner. European prices and Asian prices are over $30 US an MCF. In the US, NYMEX is around $4. We're about the same in AECO in Canada. We just saw a very big drawdown over 170 BCF because of a cold week last week in the U.S. And I think, we've still got the rest of January and February, so I think we'll see somewhat higher natural gas prices during the winter months. But I think in oil there's $20 plus of bubble value, and that to me is disturbing. And as we start seeing inventories build, and after the winter is over, I think that's going to cause the bubble to breach and for prices to come down. And people should remember that right now the hedges are long the energy commodities, particularly oil. And just remember when the energy hedges go negative. Remember what happened in March, April of 2020 when they took the price from $25 WTI to minus 20 during the rollover of the April contract, or the May contract. Sorry. So I'm in the camp that we should be careful here and we're quite defensively postured ourselves, and that's what we're telling our subscribers in our SCR product that's available by subscription. And then we've talked before about our Ion Energy, which is our macro free product. We update everybody on that, what's going on a weekly basis of what's happening with the Baker Hughes drilling data, the EIA natural gas data, the EIA oil data, and then our conclusions about it. And right now our view, and we have both reports coming out today, it's time to be defensively postured.
Should Canada be doing more to get LNG over to Asia and look at different ways we can perhaps get it to Europe? Because I think Europe is pretty nervous. They rely on Russian natural gas. If they move militarily into Ukraine, there's going to be sanctions. And Russia's probably made it pretty clear to the Europeans, if you put sanctions on us, we're going to cut off your natural gas, just like they've done to the Ukraine a number of times.
Yeah, I think that's the big issue. Part of the report that I wrote that came out today was about the history of Ukraine and Russia. And the fact is, Russia started with its capital in Kiev, and now it's Moscow. And the big issue is that a large percentage of the population in eastern Ukraine are Russian speakers or Russians, and it's Western Ukraine that's more Western focused and voted for President Zelensky. And so if they were to allow an independent vote for separation and from Ukraine and to merge with Russia, like we did with Quebec, my bet would be is they'd vote to go with Russia. So I think Russia has two problems here. One, they want to protect their citizens that are in eastern Ukraine, and two, the issue there, the Ukrainian government cut off water to Crimea. And the Dnieper River, which was providing fresh water, and now they want to do this annexation, or invasion, as people are calling it, to get a land bridge to get water to Crimea. So I think this thing is nasty. I think Putin thinks that the 1991 breakup of the USSR under Gorbachev was one of the greatest mistakes for Russia. And, he's now, trying to, keep the Russian orbit. And one real big point to make is if NATO did join the UN, the NATO, and, Ukraine joined NATO, and, NATO forces were on there, and they had, defensive short-range, long-range missiles, it's only 5 to 7 minutes or, under 300 miles to Moscow. And the Americans almost went to World War III in the early 1960s over the Cuban Missile Crisis, and in those days missiles didn't go as far, and they weren't as strong in terms of their ability to destroy targets. And so the Americans are almost two-faced on this thing. In the 60s they didn't want Russian missiles near them, and now they're saying, okay, we're going to put missiles next to you. So I think it's a little phony view that the United States has, and I don't think they're going to be willing to send military forces to support Ukraine. And so I think this thing is not over. I think it's 50-50 if there's going to be an invasion. If it does, it'll happen in the next few weeks, and that could be another market destabilization event. And it's going to be a lot of loss of life, which is going to be very disappointing, and I sure hope doesn't happen, but I think the risk of it is high. In relation to natural gas in Europe, prices, as I mentioned, are in the 30s. Russia has been meeting their commitments to Poland and Ukraine and to Germany and the others, but they haven't increased the volumes. And what they're trying to do is say, well, you want to increase volumes, approve Nord Stream 2. If Nord Stream 2 gets dragged in via sanctions not to go ahead, then, and if they do they do say, okay, we're going to add more sanctions against Russia, number one, they're not going to want to sanction natural gas because they desperately need it. So they may sanction the banks, they may remove them from the SWIFT system, they may do individual, senior leadership in Russia, bank accounts frozen, etc. But I think in the end, Russia's smiling. They've got record amounts of reserves, record amounts of gold holdings, and they could go into the China equivalent of the SWIFT system, and any volumes of oil, natural gas that don't get sold to Europe, Western Europe, can easily be sold to China, and they already have the infrastructure in place to move it. So I really don't think, Biden has many, tools here that he can really threaten Russia with. It would be nice if, the key thing, that I think, matters is instead of seeing Ukraine, eastern Ukraine annexed by Russia, is that more autonomy is given to those two provinces, and that there's no NATO forces in Ukraine, just like what you do with Austria. So and I think it's important that there's a buffer so that your Russians don't feel that the invading forces are here again, and with military forces already in the Baltic and in Poland, Russia has a history of being invaded. They do have a reason, and again, I point to the Cuban Missile Crisis, that the United States sure didn't want Russian missiles on their border, that could be fired and hit American targets in under 15 minutes. Now it's, with the missiles and technology, it's 5 to 7 minutes, and I think Putin has a justified reason for his rhetoric, and hopefully it's a poker game, and nothing nasty happens. There's no violence, and demilitarize Ukraine without NATO forces on it is the final resolution.
Now, with the problems in Kazakhstan, Russian paratroops have landed there to help them quell the riots. Any chances those people could just quietly sneak over a little closer to Ukraine as well?
Well, Russia has a group of, with Belarus, Armenia, and other countries, and I think Armenia sent, a few hundred. I think Belarus sent 500, 2,500 of the Spetsnaz paratroopers were sent by Russia. They've quelled it. You've seen comments from, President Xi of China that they were willing to send troops as well, because remember, Kazakhstan is an oil producer of 2 million barrels a day, plus significant volumes of natural gas, and the buyer and the user, consumer of it is China. So they don't want anything, disturbing on the Silk Road, where they get a lot of their resources. So not only did you have Russia involved in this, but you had China willing to get involved in this, because they didn't want any problems on their border, or removal of access of resources that they need for their economy. So this thing just, I don't think Kazakhstan, I think they're saying now everything's under control. The big thing is that there's over 100,000 military troops and 175,000 troops and supports individuals on the northern border, Belarus, the eastern border, which is Russia, and the southern border, which is Crimea. And the next few weeks is going to tell the tale. Do they come to resolution in Geneva, and does it become a demilitarized, and all the rhetoric and all the action is lowered, and then there is no military event. But right now it doesn't look like progress is being made, and I think the decision by the Russians to send troops in Kazakhstan shows that they are going to defend their interests. And, the United States can't be the policeman for the whole world. You've got China, which wants to be seen as a powerful force, the second biggest economy in the world. And they think, the Asian areas where they are is their backyard. That's their Monroe Doctrine. And, you've now got, Russia saying, look, we've seen the dismemberment of the USSR. We're not prepared to be dismembered anymore. So I think it's going to be a tough time here in the next few weeks, and hopefully it doesn't end up being a military event, but I would say it's 50-50 right now.
Also, China threatening Taiwan/Taipei. Any chances that the Russians and Chinese would coordinate any military action, knowing full well the U.S. couldn't respond to two military crises at the same time?
Yeah, I think, President Xi has been very vocal about wanting to bring Taiwan into the fold. He's definitely removed any independence and any democracy in Hong Kong. And they've got their own troops already in there, and anytime there's any problems, they're arresting everybody and closing down any media that's not friendly to the government's views, to the Beijing views. And so I think that if President Xi wants another 5-year term, and he said that one of his goals is a reunification, and he's hoping it can be done peacefully, but if not, they keep on having more and more military actions with, flyovers and showing that they have, landing ships so that they could move troops over from the mainland. So I think that, that's something to watch after the Olympics are over and after that national conference where Xi gets his next 5-year term. Then during that 5-year term, if he's going to say, here's what I'm going to do, he's got to do it.
Joseph, thank you so much for chatting with us.
I started to be a gloomy guy. I'm hoping to be a more optimistic person at some point, but I think this is a bubble and a serious one, and I think people should be defending themselves for it, both on the general stock markets, the tech area, and the energy area.
And also, if there's trouble, stocks might go down, but defense stocks will go up, and whenever you threaten the supplies of energy, that also boosts those prices.
Yeah, probably. Mm-hmm. Yeah.
My guest has been Josef Schachter, founder of the Schachter Energy Report, online at schachterenergyreport.ca. He was speaking from my hometown of Calgary. If you have any questions for Joseph or any of our other guests, you can send them to info@howstreet.com, and we'll ask that question for you. Our YouTube channel is Talk Digital Network. Find us on Twitter at House Street. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of House Street Media Incorporated.